Nikesh, I think we get right into the numbers, right? The situation is full year EPS guidance come down, revenue is beaten, and so I'm trying to understand like the environment that you're in. You know, what is it that's weighing on profitability for the balance of this year?
Well, first of all, nice to see you, Ed, and thank you for having me on. I think the market is not paying attention to our numbers carefully. We just completed our largest acquisition in CyberArk. We had a great quarter. Our numbers are across every known consensus metric. The market is not understanding that our guidance for the next 2 quarters includes CyberArk. If you take the consensus of CyberArk and ours, we're actually getting above the collective consensus, but the market hasn't understood the dilution of shares, so I think they have it wrong. Our guides are actually above consensus across the board. I said our guides are above consensus across the board. These are the post-market bots which haven't figured this out.
I always enjoy you joining us on the network. You're always honest. You're always very specific about M&A, right? The math that people are doing is the guide for next-gen ARR growth is 53 to 54%, CyberArk, Chronosphere. But that would suggest that organically growth is nearer to sort of 20%. Can you see the math that they're doing?
Yes, I see the math, but I think if they listen carefully, CyberArk computes ARR differently from us.
Okay.
So we've had to strip out a few $100 million of CyberArk ARR. Hence, if you take that out and add it back, we're actually doing better collectively than we were guided. This will all clarify by tomorrow morning as the market opens. But I think the market hasn't understood the comments our CFO made around the fact that our computation of ARR is different. It's more conservative than CyberArk. CyberArk's is aggressive than ours. If you turn their ARR down to the way we compute it, actually collectively our ARR guidance is in excess of what we previously guided organically individually.
On the call, you mentioned a 9-figure Chronosphere deal. You didn't name the customer. Somebody from the sell side asked you about the deal. They didn't ask you to name the customer. Who's the customer, Nikesh?
It's a popular LLM out there. I think more importantly, what is there to understand is that Chronosphere is a net new startup. They came up with a new way of doing observability, which is much more cost effective, much more efficient, and can scale to the volume that LLMs are putting out there. That's the reason we bought the company. The fact that 250 engineers can build something so amazing that provides a leapfrog opportunity against current players in observability, that's what we bought them for. They have been under test for many months with this LLM. They have fully been accepted across the platform. They will be replacing an incumbent vendor. And as that continues to grow, we expect to see continued growth of ARR for that one customer. But additionally, obviously, Chronosphere is talking to a whole bunch of net new customers who are looking for either get off their do-it-yourself observability platforms or replace expensive observability platforms that they've subscribed to in the past.
Nikesh, like observability is so core to what is happening in agentic right now. If we move on the assumption that the customer is one of the key frontier labs, would you just talk a little bit about why they came to you for security rather than do security themselves? That I know that might sound like a silly question, but actually, you know, a lot of the frontier labs have teams, right? They're looking at this issue themselves. They see value clearly in what Palo Alto Networks is offering.
Well, remember, observability is beyond the model, right? The model, LLM people are focused on making sure their model is amazing. It does all the things that you expect it to do. But observability is to look at it from an end-to-end perspective to see how do they make sure that the customers of theirs who are using these things and the usage continues to double almost every quarter, how do they make sure that all their systems are low latency, are working perfectly, and there's nothing in the entire end-to-end delivery chain that is underperforming. So that's what observability does. The reason they're coming to us is because they're busy building the best models, applying their AI research to the models. We're busy with Chronosphere making sure that the end-to-end proposition works and there is very low latency. By the way, this is true for not just LLMs. This is true for every consumer app that is out there. Whether you take Uber or DoorDash or YouTube, every one of these has to have an underpinning observability platform to make sure that it's fully available 99.99% of the time, so that because every minute it is not working at the capability and the latency that is required is lost revenue.
Nikesh, very quickly, you acquired Koi. The idea is greater visibility into AI threats, but just succinctly, what problem did that solve for you on the team? What are you getting?
Yeah, look, I think if you look at the adoption of AI at the enterprise end, you are seeing tremendous amount of adoption of vibe coding. People are using Claude Code, Cursor, Codex, and many, many open source coding platforms. As they use it, all that action is happening at the endpoint, at the developer laptop. And that's an uncovered area of security. You have to protect that laptop, that endpoint of the developer to ensure that you can deliver code safely and securely. Koi saw the opportunity a year and a half ago. They built a capability. They have sort of hot. People are adopting them across the board. Anyone who's trying to use vibe coding, anybody who's trying to get on the sort of coding bandwagon, find efficiencies, needs that security at the endpoint. This is different than other endpoint security, both us and other players in the industry sell, called ADR. This is very specific to endpoint security for agentic capability. That's what Koi does. So that's the reason we acquired Koi.